Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. Here are your daily technicals for Monday the 22nd of February 2021. First chart is Eurodollar. Second bullish white soldier on Friday and a follow-on higher from the pipe bottom made during the middle of last week. Prices halted, unsurprisingly, just ahead of the previously highlighted overhead resistance of the combined flatlining short stroke medium moving average, currently at 121.51, and the key March 2018 low at 121.52. This was always going to be the first piece of significant overhead resistance the market was going to have to deal with. Finally, it seems the idea of a bear flag, and separately a descending wedge pattern, may both no longer be valid, and therefore may soon be retired. So far today, a little bit of indecision. We're still within Friday's range. Interestingly, the base of the day is on the flatlining short moving average, currently 128.47. We also have below the rising medium moving average coming into the frame at 120.12. Next chart to look at is cable, aka sterling against the US dollar. Here we have a second bullish white soldier on Friday and a follow on from the previous session's bullish engulfing pattern. We now have a new high not seen since April 2018. This is all a follow-on ultimately from the break upwards last week over the dynamic capping resistance, now support of the middle time, currently 138.71, of the important late June to late September 2020 bullish shift pitchfork. This time has shown the bullish angle of attack since November last year. We have limited strands of resistance overhead now, with perhaps the March 2018 high at 142.43 the most significant nearby. So far today, a new high, but cautiously as prices have dipped back towards the open and Friday's close as well. The next chart to look at is Euro against sterling. An indecisive spending top on Friday. Over the day, still made a new low not seen since March 2020, if only by one tick. In the meantime, we still have the downside full of potential for the recent sideways triangle target X1 in the 84.80 area, and potential target X2 for the head and shoulders top still in the 85.15 area. So far today, another small cautious dip lower. There seems to be some overhead resistance from the April 2020 low at 86.69. US dollar against the Indian rupee. A lower but indecisive spinning top at the moment. On Friday, it was nevertheless the lowest low and low close since early March 2020, as well as a second consecutive close below the significant 50% Fibonacci line of the July 2019 to April 2020 move at 72.64. Plus the previously highlighted range of about 72.75 to 73.10 formed over mid-January to mid-February. Topside, we still have the capping effect of the descending short moving average, currently at 72.78. Then below we have the breach September 2019 high at 72.41, plus the November 2019 high at 72.24. The January 2020 high also at 72.13, and finally the February high at 72.05. So far today, we've breached the September 2019 low at 72.41, but then pulled back up quite smartly. Next chart to look at is the US dollar against the Brazilian real. Despite being outside once again the late October 2020 to early January 2021 bearish shift pitchfork, the market nevertheless executed a very smart volt face on Friday with a key reversal down that, whilst not completely through the support below the market, still made a big effort to do so. Prices closed below the recent 50% Fibonacci line at 540.85 and the 50% Fibonacci line of the May to June 2020 move at 539.29, and right on the medium moving average, currently at 538.01. However, though prices dropped down to long moving average 536.50, they did not manage to breach it, nor obviously close below it. Now it would be interesting to see if there was any further follow through to that, and we haven't. We've had the exact opposite. We've had a gapping move higher, and we're now testing up to the highs that we've seen back in mid-November and even sort of early January at the moment. But it's been a cautious move higher. Next one is US dollar against the Mexican peso. A fifth bullish white soldier on Friday, and the first closed back up over the descending medium moving average, currently 20.2930. This time looking a more serious assault higher. The market's rise is now approaching the lows of September and October 2020 in the 2083 area. Plus we have the rapidly descending long moving average, currently at 21.2030 above the market, entering the frame. So far today, a further move higher, an assault on the December 2020 high at 2065.10, which seems to be sustained at the moment. ICE Brent crude oil futures. The next one is the first of the commodities. A lower indecisive spinning top on Friday. I suppose you could call it a second bearish black soldier, but I would be more inclined to look at Friday as a suitable follow-on to the previous session's bearish dark cloud cover pattern that formed the top of the recent market. We still have above last week's high the April 2019 to date downtrend, which is currently at 65.67 and seems to be in no hurry to get up there, the market. So far today, an interesting action so far. Right now we're looking at possibly making a bullish engulfing pattern, though it is still early. The next chart to look at is ICE gas oil futures. A second though lower indecisive spinning top on Friday. Interestingly, the market closed back below the September 2020 high at 523.75, thus making last week's move higher stall at that level on a closing basis. So far today, a lower opening, what looks like a bear spike higher so far. If only it wasn't on the wrong place for one to occur. That resistance at 523.75 closing basis still seems to be active. UK FTSE futures. A bullish army and possible hammer on Friday as the market once again found it hard going, pushing lower through supports, notably the short medium moving average, which is currently at 65.79, and the June 2020 high at 65.12. Below this, with some support from the very recent small band of congestion between 64.40 and 64.85. Then another recent small band of congestion between 63.80 and 63.11, and the larger and older congestion dating from March to June 2016 between 63.75 and 60.75. Finally, there's a hint, just a hint, that we may have a head and shoulders top pattern action building up from November 2020 to date. No more than that right now. So far today, no follow through on to Friday's action. The opposite indeed, a drop down to test the support, the June high, seemingly rejected back up in the first instance. German DAX futures is next. A key reversal up, if only just on Friday, as the market seemingly did not like testing or moving below the previously highlighted two interesting supports of the short moving average, currently at 13.915, or the important rising neckline, currently 13.852, of the ragged late September 2020 to date reverse head and shoulders pattern. So far today, a really interesting move lower. We're currently on for an immediate, possibly countering, key reversal today. If we close above 14.003 or below 13.883, we'd be on. Anything in between them would have a lesser outside day. What is special is that so far we're currently looking at an outside day, but also a possible bearish harami action, which is now moving out to a possible key reversal down. Watch to see where we close in relation to those two supports mentioned above or earlier. US E-mini S&P futures. An indecisive spinning top on Friday. Not really how you would like to end the week if you were a bull. The top side of the market is capped by the upper time, currently at 39.81 of the very recent December 2020 to February 2021 bearish Andrews pitchfork, and I suppose also by the broken lower time, currently 29.58 of the September to October 2020 bullish Andrews pitchfork. The base of support is the January high and the middle time combination at 38.62 and 38.64 respectively. So far today, a test down to the combination of the support, though holding steady at this time. Below that we have the rising short stroke medium moving average, currently at 3800. French CAC 40 futures. A reactionary bullish white soldier on Friday, but it does stand out on its own as the previously highlighted upper bull channel, currently at 57.87, of the big May 2020 to date broken bull channel capped the rise once again. Overall, we are still in between the overhead middle tie, currently at 58.66, and the lower tie below, currently at 55.84, of the December 2020 to January 2021 bullish Andrews pitchfall. So far today, an aversion to testing the overhead upper bull channel, it seems, with, interestingly, what looks right now as it might be a possible hammer pattern action. LME 3-month copper is next. A bullish long white Mariposa on Friday, as well as an 11th bullish white soldier, though some were only just as they resemble indecisive spinning tops more than anything. It was ultimately a continuation higher from the recent rare bullish roof pattern, sometimes called a half diamond pattern. We've not seen such high since August 2011. Looking back there, we're in fairly free territory here, bar some congestions, until the $10,000 level, so it pays to watch those at 91.60, 93.05 and 96.05. So far today, a gapping higher open and sharp move higher through the 91.60 congestion and just short of the congestion at 93.05 before a pullback to almost unchanged on the opening. Right now it looks like a possible spinning top with pretensions to be an island pattern. Next is LME 3-month aluminium, and is the last chart of the day. An indecisive spinning top pattern on Friday, though some might look at it as a possible bearish hammer. I think that is stretching a point a little too far. We're in fairly free territory overhead, so I suspect that Friday's action may be some profit taken after running up earlier last week through target X3. That's the final target for the recent 2 bullish descending wedge patterns we had over December 20 to January 2021. So far today, a resumed attempt higher with another new high not seen since October 2018, and indeed capped by the August 2018 high at 21.78. However, it seems this August 2018 high has affected the market somewhat, as we are looking at a possible shooting star pattern right now, possibly a bullish opening white Mariposa. The questions now as whether it will solidify and only solidify at the close would be: 1, is it a bullish opening white Mariposa or a shooting star pattern? And if it's a shooting star pattern, is it whether a type 1 bearish or a type 2 bullish pattern? Thank you for listening. This short version broadcasts essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. And here is the final bit.